Ira Epstein of Linn and Associates with your metals market update, and this is your wrap-up for Thursday, the 19th of September, getting on to about 2:50 in the afternoon. Remember, this market's going to trade till 4 p.m., but the settlement prices were determined at 12:30 p.m. already. And you're going to be right in these areas, around the 1786 or so in the silver, right in this area in the gold market. It tried to rally today in the gold and the silver, couldn't quite hold on, but I don't know if the market's got a lot left on it one way or the other. The interesting part was the dollar was down, which probably cushioned and helped these markets a little bit. When we look at the stock market, you went up for the highs in a number of them, and at the end of the day, we're fading a little bit. It's going to end up pretty close to unchanged. Trend still up. We're watching what happens in interest rates, and they're very flat today, not going one way or the other. The Fed is still doing operations to calm money markets. They added today $75 billion. So if you're a bondholder, holder of treasuries, you go and you give it back to the government and you're getting cash for it. And they're trying to drive the interest rates closer to where the Fed funds rate is. So we'll probably hear about an operation tomorrow. I've already heard that there is one scheduled. We'll see what happens there. In the gold market, you're in an upthrust. You're in a correction. I know that. You know that. You can see it. You've gone on a closing basis from 1526 back to the 1499 level that you're at on a weekly continuation chart. But you can also see how the market thrusted to the upside. Now the question is, how ugly is the chart pattern getting? And I'm concerned about it. I'm concerned because you're starting to challenge these lows. What this market needs to do after an inside day, and if you look at yesterday, we had an outside day up, is number one, not take out yesterday's low. If it takes out yesterday's low, I get very concerned about it because that means that this support zone is giving ground. I don't want to see that happen if you're longer term bullish, which I am because of the bias on the close only chart. When I come to a daily chart, and this was the same chart with the swing line, it's got a pattern of lower highs and lower lows. It's in a downtrend. To negate it, you have to take out 1519.70, and that would negate the pattern of lower highs, lower lows. When you look at a chart like this, you don't see that unless you put the swing line on it. It's part of our charting software package. When I next look at moving averages, you've got downside bias. So I have a market that's got lower highs, lower lows, and I have downside bias in the market. That is not bullish. You have to get up and over and close over 1524 to negate that bias. And if the market drops from here, as it held the first challenge of the lower Bollinger Band, I would not be surprised if the 1484.50 tried to hold. But again, that market would still be in a downtrend, and instead of going back to the upside, as bulls have been hoping, this market, it's saying, no, I'm not ready for that. As you look at the slow stochastic study, you're oversold. So here's how I'm viewing it. Even if the market takes out this 1490.70, the fact that you're oversold at 1484.50 limits what I'm looking for on the downside when you're oversold and not trying to embed. There's no magic. You can get through that number and fall further. The 100-day average is all the way down here, and the chart would not be pretty. So I'm looking at that, and I'd still be concerned about the long side of that particular market. Now, as we come over here to GLD, you had an outside day down yesterday, and you haven't been able to take out the high of it. It's the flip-flop of what we're seeing in the futures. This one closed down, and if we come back to the futures, you had an outside day up. So the two are not in sync with each other, but where they are in sync is right here. The bias is down in both. Now, when I look at the slow stochastic study, both numbers today were under 20. Yesterday they're under 20, the day before they're under 20, and the day before. You have an embedded reading, which means until the red line closes back over 20, the bears are in control of this market, and the odds favor they're going to try to push the market down to 138.68. What flips me away from that? Taking out yesterday's, that's Wednesday's high, and then I have an objective, and this is a strange chart of just the 18-day average of closes. This is not a pretty chart one way or the other, but I think the bears have grabbed control of that market. When we come to GDX, you're oversold, That's the first thing. Second, you have a pattern of lower highs. But I could also argue, now I'm starting to make a higher low. Do you see that right through there? So we've got a market that's coming in like this. The bears get the nod because the bias is down and the legacy of the swing line is lower highs, lower lows, but it's waning on momentum, and we see that right through here. The gold-silver ratio, well, it's been fighting against this 18-day moving average of closes in red. It recently got over 85. It's pulling back a little to 84.40. And when we look at silver, I have an oversold market in a downtrend. The next support level, if it breaks through this 1750, may well carry this market into the 1733 level. Converse of that, you have, like in the gold, you've got lower highs, but now you're making higher lows. This is now a chart that is trying to figure out, where am I going next? Because you're oversold, it's hard for me to tell anyone you go short this market because you're looking for the lower Bollinger Band. If you can take out the 1812 area, you negate the downtrend, doesn't mean you're in an uptrend. What would help this market, you can see yesterday's low was 1758, I think I said 50. And this low right here was 1747. So what would get the market bullish? We already are in the bear camp that's oversold. You'd have to close over the 18-day average of closes, 1828.50. That would give you higher lows. You'd be taking out this high right here and over the 18-day average. That's the piece of work that this market is stuck with, and that's a big move. It's 50 cents. In the copper market, we're leaning down again into the support at the 18-day average of closes. Now, which way from here? I think the bears will try to push the market through 259.75 to say, then they have lower highs, lower lows, and they're under the 18-day average. I think the bulls are going to try to support the market right at this 260.50 area and not let them have their way. If they get their way and the market first doesn't take out today's high, the swing line will become a very important number, and obviously this all comes into play, this area here. Battleground right in front of you. In the platinum market, now we've had 2 days in a row fighting at the 18-day average of closes. The market today and yesterday refused to settle under the 18-day average, keeping the bias up. So while the swing line is down, the bias is up. The market is not yet in oversold territory. Get under 922.10 and everybody in this area of the market that's holding a long position is underwater. The bulls want to get this market over 946.80. The bears want to keep it under 922.10. And in the palladium market, yesterday we were very close to losing the embedded reading. You can see an 81 number here. You're starting to lose the momentum. The key is, what does it do now? Does it stay with the upside bias? And that's what it did. It rescued itself and kept that momentum up. So this is the strongest of the metal markets. And it's still in an uptrend. It's got an embedded reading on breaks until that red line closes under, 80. I look for the market to not make a run at the 18-day average. If it starts weakening here and that red line gets under 80, be careful. You could be at a market that wants to correct more. As for the dollar index, how many days in a row has it hit that 18-day average? It's not following through to the upside or the downside. Let's just say it's in the middle of no man's land looking for direction. You know, one of the tools that I use intraday when I'm looking at charts to say, gee, why is it up at a point or down at a point and there's no follow through? I'll look at this tool called a pivot point. And here's what it is. The pivot point looks at the previous day's open, high, low, close. There's a formula, and it plots out these lines that you see. Typically, there's 2 support lines under the market, 2 resistance over the market. What you're looking at is trying to tie, at least what I think, you try to tie momentum, I like the slow stochastic with it, looking to see, is the market oversold or not intraday? Now, the type of chart used with this, a lot of people will use a 5-minute, a 10-minute, a 15-minute chart. We explain what to do in a 3-part video series that is yours for free. It's part of your trading library. Simply go to our website, Look at free offers right on the home page, click it. If you're interested on that, you can also, if you're watching me on YouTube, just click up at this icon you're going to see here now, and that'll take you to that page as well. Again, free offers, look at the other ones there, work with them. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.